This quick tutorial will show you exactly how to calculate the gain on the sale of a rental property using TurboTax. Whether you're a seasoned property investor or selling your first rental property, understanding how to report your gain is crucial for accurate tax filing. Let's dive in and make this process as straightforward as possible. First, begin by opening your tax return in TurboTax. If you haven't already started your return, make sure your information is up to date. Once you're in, look to the left-hand side of the screen where you'll find the navigation menu. From there, click on the option labeled Federal. This will take you to the section where we need to work. Next, you'll want to navigate to the Wages and Income tab at the top of the page. In some versions of TurboTax, this might be labeled as Income and Expenses. Either way, this is where you'll find the information related to your rental property. Scroll through the list of income categories until you find Rentals and Royalties. Here, click on the Start or Revisit button next to Rental Properties and Royalties, (SHE), depending on whether you've entered any rental information previously. Now, locate the specific rental property you've sold. You might have several properties listed, so make sure you select the correct one. Click on Edit next to that property. This will take you into the details of your rental property where you can input the sale information. Scroll down to find the section labeled Assets/Depreciation. This is where you'll handle the sale details. Once you find it, click on Start or Revisit. You'll be looking for the asset that represents the property itself. This might be labeled as property, real estate, or simply have the address of the property. Once you locate it, click Edit. You'll then be asked if you sold or disposed of this asset during the tax year. Answer yes to this question. It's important to ensure that all the information regarding the sale is correctly entered. This includes the date you sold the property, the sales price, and any asset selling expenses. Selling expenses can include real estate broker commissions and closing costs, so make sure you have these figures handy. Once you've entered all the required information, TurboTax will automatically pull your historical depreciation records. This is crucial because depreciation affects the calculation of your capital gain. TurboTax will use this data to calculate your final capital gain on the sale. It will then generate the necessary forms, which are Form 4797 and Schedule D, for your tax return. And there you have it. You've successfully calculated the gain on the sale of your rental property using TurboTax. By following these steps, you ensure that your tax return accurately reflects the sale, helping you avoid any potential issues with the IRS. If you have any concerns or uncertainties, consider consulting a tax professional to ensure everything is correct. I hope this guide has been helpful and has made the process a bit easier for you. Thank you for watching, and don't forget to subscribe for more tax tips and tutorials.